Hi everyone, I'm Chad Shoup, the editor of Automatic Profits Alert, and for several months now I've been extremely bullish on the stock market, and I've told you to buy, and I've expected this earnings season to really help pull us out of the correction, out of this current consolidation period, and help us rally to new all-time highs in the S&P 500. And I stand by that. I still think that we're going to see an enormous rally, but I also don't kick away the seasonal trends that take place in the stock market. For example, the 6-month period where we see the weakest returns for the stock market, I warned you that you wanted not to avoid the stock market during that period this year, that instead you wanted to buy into the stock market and that you wanted to benefit from a rebound from May through October, which is those weakest 6 months. Well, if you did that from May through today, the stock market is up over 6%, which is a very strong run for the S&P 500 when you think about over any 1 year period, a 10% average return is expected. So 6% in just a couple of months is a solid return. But now I think we're going to go through maybe a slight pullback, or at least for a few sectors, because I study seasonal trends in the stock market on a daily basis. And coming up, I expect to see seasonal weakness in 4 particular sectors. And that's the material sector, the healthcare sector, the consumer discretionary sector, and the semiconductor sector. So those are 4 sectors that you can look to avoid or to even benefit with an inverse ETF here over the next month or so. Now, I expect it to be a short-lived pullback, so don't use this as a cautionary sign to jump out of the market or to exit completely. You could just avoid those 4 ETFs over the next month and then feel free to jump back in once we get into September. Or you can look to benefit from this pullback by using an inverse ETF. Now, an inverse ETF is just set up to track the opposite return of the overall ETF. So as the ETF falls for that sector, this inverse ETF would actually rise. And that's what you're looking for to benefit from the pullback. And I don't recommend shorting stocks because, after all, a company's main purpose is to rally. If a company sees weakness in their share price, they're going to do whatever they can to lift it back up, at least in the short term, so they could buy back stock, they could make an announcement, or something to kind of erase whatever gains that you had betting on the stock to fall. So I just avoid shorting stocks, and I look to use an inverse ETF as a way to capitalize on a general pullback for that sector. And just keep in mind, if we jump in and it starts to go the opposite way, meaning that the sector continues to rise and your ETF is falling, your inverse ETF is falling, then just feel free to cut your losses and move on, because 90% of the time the stock market's going to be rallying. And right now I think is an extremely bullish opportunity, and stocks are going to rally from here till the end of the year. We're just going to go through a short pullback in the month of August. So be sure to look out for that, and you can avoid those 4 sectors if at all possible. But remember to jump back in September to benefit from the late year rally. Well, that's all for my video today. If you enjoyed it, be sure to subscribe to our page and continue following us for more great insights. Until next time, I'm Chad Shoup with Automatic Profits Alert.